So I'm here in beautiful Orlando, Florida. Yesterday afternoon we wrapped up our first 2-day mastermind workshop, the Steady Trader workshop. We're going to be doing this all over the place. The guys did great. One of the topics that we covered yesterday and that really helped the guys a lot was sort of this notion that seems to be out there, that all you need to use is, a moving average or some sort of an indicator to make money in the stock market. And obviously it takes more than that. So one of the things that is really important to understand, that it really has to do with a confluence of things coming together that sets up good and high probability trades. So what I thought I would do today is give you a couple examples here so you can see that how dramatically the probabilities improve of successful trades if you have more than one. In fact, a couple of things come together, both from a technical and potentially even from a news flow perspective, to give us really high probability trades. So let's slide on over to the charts and let me give you a couple of quick examples. So let's start off and look at one example here in the stock that most likely everyone is aware. It's shares of Apple, ticker symbol AAPL. And again, what we're looking for is what we call sort of confluence zones, more technically speaking, and again, something we talked about over the past 2 days here in the Orlando workshop. Let's have a look. So the area I want you to focus on is this area right here, where you can see that Apple shares bounce off of this red line, which happens to be the 200-day moving average. Now, a 200-day moving average is nice to look at, but again, it's certainly not something you can base an entire trading methodology off, because it's going to work sometimes and it's not going to work other times. So what's important, though, is to look at when you find something like this, when you see a stock come down to, say, its 200-day moving average, you see if there are other things happening as well. Well, in this case, I happen to see that there's also a very simple horizontal support. So if I were to redraw this box a little bit, you could see that there was previously horizontal support in this area, in this vicinity here, spanning from around 102.50 to about $105 on top. And you can see that's where the stock came into, as it coincided also with its 200-day moving average. Well, if we take this another step further, you can also say, if you take the most recent significant lows and you take a Fibonacci retracement tool and measure it up to the top here, you can see that we retraced an exact 50% of this entire move up. So let me get rid of this Fibonacci stuff so you can see it a little better. So we've got 3 points coming together all at once: 200-day moving average, horizontal support, as well as the Fibonacci retracement, 50% retracement, or just a general 50% retracement. Ultimately, you can see we had a very strong bullish reversal, and it was off to the races. Now, the other example I want to show you is in the SPY, also known as the S&P 500 ETF. You can see here too, very similar to shares of Apple, we've got the 200-day moving average here. That's that red line once again. And again, what we're focusing on here is this area right here, right? So not only did the stock, or in this case the ETF, move into its 200-day moving average, but we also had a Fibonacci retracement, or a retracement that from the most previous significant lows into these highs right here also measured an exact 50% retracement. So again, we have multiple things coming together, not just one single thing. If we were to peel back a chart a little more even, you would see that, again, you draw lines with a crayon, not with a pen. We more or less, as we retested this area, also retested an important previous breakout point from this very simple diagonal, i.e. horizontal line that I just drew. So when multiple things come together through the lens of technical analysis, your odds dramatically improve of having a profitable trade. Hope this makes sense, and I'll see you in the next video.